Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers stepped in ahead of the 12.5 low from June 9th, and then that entire 15 area marks the bottom of a larger time frame balance. So yesterday we saw a breakdown outside of a 4-day balance area, and then from there the market went down to the bottom of a larger time frame balance area, and in the overnight session found buyers at the bottom of that larger time frame balance around that 15 support ahead of the 12.5 swing low. Heading into the open, we know that the buy side has been more active and dominant in the overnight session. We've seen some selling come in off this 27.5 to 30 zone, which is going to be the initial resistance zone today. Now, our short-term bias is going to continue to be neutral because now we're trading in a larger time frame range and a larger time frame balance area. If the market can now take out 27.5 to 30, we could quite easily move right back up into the 35 quarter to 37 quarter zone, which marks the 35.5 high volume node and the previous VPOC as well as yesterday's high. And that's still a zone where responsive sellers can be active on first test. But we do have to understand that a breakout above 27.5 to 30 invalidates yesterday's breakdown, and it would mean that we're just trading in a larger balance area, in a larger range now, and sell side can be active on first test of every zone on the way up, but we can't be overly bearish just because of yesterday's breakdown. So if we continue to head higher on high volume and high momentum, then although responsive sellers can defend the 35 quarter, 37 quarter on first test, it doesn't mean that it has to cap the upside. If there is sufficient momentum in the market, then we could go higher into 40.5 to 42.5 and possibly even into this week's high at 45.5 and 47.5, and sell side can still be active at those areas of resistance on first test. In the event that the market fails at 27.5 to 30, on the downside we have pre-market support at 19.5 to 21.5, and holding above that area would still leave the buy side more in control from the overnight session. A failure at 19.5 to 21.5 would bring 15 to 17 into play, and possibly even the overnight low at 13.75 and the low from June 9th at 12.5. So ideally, if the buyers are going to retain control, we want to see the market holding above 19.5 to 21.5. But given that the market's trading in a larger balance, a move down to 15 to 17 or even 12.5 to 13.75 wouldn't really change that larger time frame structure. We would still be testing the bottom of a bigger picture balance area. That would still be a spot where buyers can be active. But what we do know is that in order to reverse the bullishness that we've seen in the overnight session, and in order to continue breaking down below 15 to 17 and below 13.75 and 12.5, we would have to see a lot of broad market weakness and some decent and sustained downside momentum, which doesn't seem very likely at this point, but that's something that we will have to monitor in real time. So right now, heading into the open, how the market responds to 27.5 to 30 is going to be quite telling, and if we can take out that zone, it would confirm the overnight bullishness, and from there we can start heading higher. Our short-term bias is going to continue to be neutral, which means that we have to continue to be nimble and flexible with our bias intraday and be open to both long and short setups. But given that we're still trading in a big balance area, we are going to have to continue to be pretty nimble intraday and see how the market develops. Today, the context is a little bit more complex because of this 4-day balance breakdown combined with still being in a larger time frame balance. So I think just be very mindful of how the momentum situation plays out in real time. Understand that when these bigger patterns are developing, there can be some bigger intraday swings that take place, but they're all a part of this bigger pattern that's developing, and it's important that we don't lose sight of what's happening on the larger time frame, and we don't get sucked into just the smaller patterns that might develop on the 5-minute chart or the 1-minute chart. Be aware of the larger pattern and bigger picture. This is still trading in a large balance area, and that's why our short-term bias is still neutral. So those are the main ideas. Let's see if the buyers can take out 27.5 to 30, and we'll take it from there.